In this video, traders, I want to look at a Keltner Channel Trading Strategy. Stay tuned. Hey guys, warm welcome to you. All right, so I want to share with you some of the things that you might want to take into account when building a trading strategy based around the Keltner channel. Like as always with these things, these are guarantees implied. There's no suggesting that what works for someone will work for another person. Conditions change, all this type of stuff. But some of the parameters, I'm going to give you some ideas to help you build your own strategy. I'm very much a fan and a believer that you have to create your own thing and to build the confidence in it. But you sometimes need some building blocks and go, well, okay, that's great, but I like the idea, but I need to kind of have some theme and structure to work with. So I'm going to kind of give you that today, give you a broad overview of perhaps ways to develop your own trading strategy using Keltner channels. Okay, so Keltner channels are available on TradingView. They're available on all charting platforms pretty much. So they're slightly different to Bollinger Bands in that they're based on an ATR. So I've got them already loaded on here on a FTSE 100 daily chart. And some parameters that you can adjust with it. You can adjust the length. The multiplier is pretty much always set to 2, the default. We'll talk about that in a moment because I think that's interesting and part of the edge you can carve out using these Keltners. And how the bands are calculated: average, true range, range. And you can make adjustments, but generally speaking, they are going to be an average true range, width of the band, 10 period multiplied by 2. Different to a Bollinger Band, which is a standard deviation. So some people prefer the Keltners because very often price can stay outside the Keltners for a reasonable period of time, rather than a Bollinger Band, which expands massively and contracts. So like one of these type of band type indicators, it's always worth testing and trying out for yourself. Okay, so let's use the default. So if you're using the default, one of the rules of thumb is absolutely to ensure that if you are taking, before we go on to that, let me just kind of confirm this for a moment. You have 2 ways of trading these band strategies. Say with Bollingers, to be fair, you've got a trend trading momentum strategy or a mean reversion. Now you're like, Mark, you can't trade trend trading with Bollinger Bands. You absolutely can, but you have to use a different strategy and a different approach. And that strategy tends to be, hey, we're in a trending environment. The slope is quite aggressive. I am going to look for an inside out. So in other words, I'm going to look for, this is kind of a good example, you've got a good slope on the channel, you're looking for a reversion to the mean that then comes back out and retests the upper channel. So that would be a great example of a trend trading approach with a band. So you can trade them in that way, but they are generally most powerful, I find, in a mean reversion environment. So if you are trading, the slope of the band is super important because that is going to frame how you generate your trading strategy and what strategy you use. So if you have an upward sloping band like this, that's quite an aggressive angle, right? You've got an angle there of is it 45 degrees? It's pretty much, 38 degrees. That's reasonably steep, right? 35 to 45 degrees is reasonably steep. And so you go, okay, when we come back to the mean, I'm looking for one more test of the upper band, and that would be your trade. And, this is trigger, actually, by the way, this is something that works very well, I find, again, no guarantees with any of this stuff, is that if you looked for a break of the prior day's low as a trigger, so I'm jumping the gun a little bit, but hopefully you can stay with me on this. If you look for a break of the prior day's low when you get a kind of filtering signal, so in other words, if you're trading this trend environment, you've got your band set, you've seen the angle of the band is reasonably steep. And again, you can adjust this. If you're a guy who likes to go yes or no, then fit an angle on that and say the angle has to be X above X. If you're a guy who likes to just eyeball things like I tend to like to do and go, that's a trending environment, that's a reasonable slope, I will take a trend type trade in this. Then comes back to the mean, fine. When it breaks through, when you get that signal candle, that's not necessarily your trigger candle. The next candle is when you take the trigger, and something to look for is when it breaks through that prior day's low, comes back through, there's your signal, there's your entry, your stop goes below the current day's low, and then you're in. Now, if you look at the risk rewards, and I appreciate this as a hindsight, just picking stuff up with cherry picking, but if you're trying to structure trades in this way, this is something that absolutely you can be looking for. And if you imagine here would be your entry, there would be your target, the top. Well, this is actually your exit here, but imagine that's the upper band, and that's exactly where you come out. It's very difficult to structure and know this at the time because the bands are very different, but look at how good this risk reward ratio is. this risk reward ratio is 18.5 to 1. Now, you might be like, yeah, okay, but even if you had it at the upper band where the upper band was as you took the trade, you're still looking at a 10 to 1 plus, 11 to 1. So this is the type of thing that you're trying to position in, which is a kind of swing traders filtering process. And we'll talk about mean reversion in a moment, but this is a kind of good example that if you want to use a trend, you can align yourself with this. It's saying, okay, hey, this is what I want to see on the daily chart. And by the way, you're not going to get many signals for this. This is not something that's going to come daily. And we'll talk about adjusting the band settings in a moment, but it's something that you might get once every quarter on a market. But if you're watching 10 markets, all of a sudden that becomes a feasible strategy. And you might be saying, yeah, but Mark, I'm a day trader. It's not a value for me. Absolutely not. I will disagree. Because what you're doing here is you're filtering on the higher time frame. This goes for any strategy. You're filtering on that higher time frame. You're saying, hey, I like this. This sets on a higher time frame. It's matching my parameters. Now I'm going to execute intraday. And so all of a sudden, you have a higher time frame target, the top band, with a day trader stop below the current low, because you've used that trigger. That's how you can generate these high risk reward trades. That's how you can generate high probability, high risk reward ratio trades. And if you're doing these enough, this is kind of where you can make these big leaps. So anyway, trend, if you're going to look at it from a trend, this is not the point of the video. I've gone off piste quite a bit here, but I wanted to outline that and say, hey, the slope of the band, if it is sloping, we're not fading band tags, we're using those as targets, and we're looking for the mean as the initial trigger entry, if you like. Okay, so go back to the initial point, which was if you're trading mean reversion, which is really kind of what these bands are all about, then you want a nice flat band. So you want to kind of look at your band and go, right, this thing is flat, it's range bound. That's going to be all intents and purposes a range bound market. How flat is that? 3 degrees, happy, calling that flat. So now you're in a situation where this market's sitting here, it's flat, it's flat, it's flat. And I always look at the trend as well and go, okay, what's the trend doing? Do I need to take that into account? Do I want to make sure I'm not fading new highs? Probably not. But then you go, okay, right, the bands are flat. Any excursion outside of the bands is something you want to get interested in. So this would be a perfect example. I like to add a little kind of extended move. So what do I mean by that? So one day out, I'm a bit cautious because that could be the start of some sort of reprice, a multi-day move. 3 days plus in one direction is the type of thing you want, especially if it's coupled or if it's combined with the classic exhaustion type parameters, which are big range on the day, higher volume, and you're outside of the band, and the band is flat. Great. So you've got flat bands, you've got 3+ days of move in the direction. So these are your parameters. You've then got some kind of exhaustion signal on that candle as a preference. So in other words, large range, large volume, and then you can consider, okay, I want to fade this trade. This is a mean reversion trade. I'm looking for a trade long outside of the band, and the exit of the trade is a test of the midpoint. You're not looking for an extension back in the way you could do, but ultimately it's a mean reversion trade outside in, spring stretch, looking for it to contract back. You're expecting it to contract back, come back to the midpoint of the band. If it doesn't, using a stop below the extreme. Now in this case, you didn't quite get that break of the low that I like to see and comes back to create a nice little structured trade. So other ways of doing it are, okay, I will take the first green. First green day after that, fine. Go long on the close, stop below that. That's quite wide. That might screw your risk reward ratio on the trade, but it's one option. Another option is to say, okay, I will take a break of the prior day's close. If we go from kind of red to green, which we did on this day, right? We were closing here, we went lower, 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 and then we closed higher. So we had a red to green day. So as soon as it goes from red to green, you're using, as you were before, you're using the prior day's low as your kind of entry point. You'll be using the close and the gap fill as the entry point, or not the gap fill because it's already filled the gap. But if it goes lower, comes back, you're kind of using that and a stop below that. You want to structure it anyway. I think you're stacking the odds in a favor, right? You're saying, okay, we have a flat band condition, we have a range bound condition. All of a sudden, we have an extended move, multiple days, that's going outside of normally what keeps price enclosed. Now, that's great. Filters, tick, tick, tick. Then you add your triggers, and you might not necessarily get your triggers. You might say, okay, I didn't quite get a trigger. It didn't quite do what I wanted to. But when it breaks through the Friday's low and comes back, that's worth a go. From my perspective, it is. If that comes below the close and comes back and there's a red to green day, that's worth a go. So you kind of add these triggers and go, hey, the risk on this deal is not a lot, but structurally the chance of this spending 4 or 5 days coming back to the mean is quite high. All of a sudden, 18 to 1, 10 to 1. Take those deals all day long. So this is why you get the power of this top-down analysis using something like this. Okay, so there's a couple of ways to kind of look at it. The final thing is didn't want to leave out is a lot of people say, hey, I want to use a 3 period or 3 multiplier on your Keltner. And that might work for lower time frames. But I want to say that, you will rarely get signals on some markets. And I really don't want to take them, if I'm honest, because the times you do get it when the multiplier's at 3, if we go back all the way to COVID, that's when you don't want to be taking it because it's a real reprice scenario. So very, very rarely do you get it tagging the 3 period or multiplier. When it does, it's something significant. So I always say, hey, and I wouldn't necessarily have the band on setting on 3, but if I'm scanning through stuff and I get all of a sudden we get in one day a move with news and it's tagging the 3 multiplier bandwidth, I'm going to be like, this is probably going to continue. And actually, I'm probably going to look for some kind of retracement. I'm not going to use the bands for this, but some kind of retracement that flat tops and rolls over for a second leg, because it's so rare. You don't get it for years and years and years and years. And so be very mindful of that. So that brings you to what's the best setting. 2 is going to give you loads of signals. 2.5 is not bad. I quite like using between 2.5 and 2.75. I hate being like the guy who goes, oh, it's 2.729, is what you need to be accurate. No. Each market's different. Some markets are going to respond better to something like a slightly wider band. Some markets are going to be fine with a 2 setting. It's up to you to look at that. And bearing in mind, the one final thing is that tend to get extreme moves to the downside on the indices, your equities, because that's where the fear happens. So you tend to get the band lower to midpoint type trade. On commodities, you can get it both ways, and often it's more to the upside because there's a fear and oil spiking, and it's tend to be like a fear-based trade. So something to look at. And play around with the settings, but don't go too crazy, and adjust your settings of the band to the conditions of the market you're trading. Some people say that's curve fitting. I think it's being smart and saying the structure of the market is X. This band has worked well for the last 10 years in this market and kept it out of trouble and reasonably good at keeping price intact or within the band. I'm going to use a 2.5, or I'm going to use a 2, or I'm going to use a 2.75, or whatever it is. But slope of the band, that's key. Flat band, you're okay to use those outside extremes as your trigger or as your filter, and then you add a trigger to it. If the band is sloping, then you're using the midpoint to the outer band. That's the way that I look at it. Hopefully that helps you structure some strategy and helps you guide your trading into a kind of this playbook situation where you go, okay, these are my Keltner strategy, and maybe it doesn't set up much, right? Final thing on this, guys. Maybe it doesn't set up much, but maybe you have it there. You've documented it, and you go, if that sets up, that adds extra edge to my trading. And that's ultimately what you're looking for. You're not necessarily looking for something that's pinging all day, every 5 minutes. But if you're scanning for this stuff at the end of the week and going, that could trigger in this market, and you've got a handful of markets you're looking for, and then you go, right, actually, Wednesday, it's triggered. I'm going to go into Thursday looking to get long at the open, blah, blah, blah. It helps guide you into stuff where this could be that supply-demand imbalance, which is where our edges as traders, which is where we can potentially carve out opportunity. Anyway, guys, see you next one. Take care. Bye-bye.